Hi traders, you're welcome to Forex Concepts. This is the next episode of the Forex Intermediate classes, and in this class we will be discussing about how to spot retracement as a perfect entry point for your trades and transactions. Okay, so in this Forex Concept classes, we try to break down our lessons as much as possible so that you can be able to have that understanding to a level that you will become a master on your own. Okay, so on this particular channel, we don't show people signals on the entry point, but rather we teach people how to become, proficient at Forex such that they will not need any, signals, but rather they will become independent on their own to be able to, pick their own trading decisions or make their own trading decisions. So now I am on Euro USD. Okay, so now I am going to be showing you how you can be able to use retracement in order to detect the perfect entry point. So we are going to be using majorly a Fibonacci retracement tool. Okay, for those of you that do not know what a Fibonacci retracement tool is, you can go back to the previous video I made about the use of Forex applications. So is in this intermediate class. So just go to that category of classes, that's the intermediate, and then choose out that topic. Then you will get a lot of knowledge about how to use the MT4. So now back to today's class. Now majorly what happens in the market is that there's a continuous movement in prices, okay, such that you will be looking for a best entry point for you to be able to execute your trade. Now if you look at this point, for instance, let's take a look at this as our study point. Okay, starting from this point. Now let's take a look at this. Let me reduce the size of this emoji so that it doesn't take up the whole size of the screen. Yeah, so now coming down to this point, okay, coming down to this point before coming to this point. Okay, now let me put another emoji here. Now if you look at it, good. So now if you look at these particular transactions here, you can be able to notice that the price normally comes down to a particular point, and by the time it starts reversing, then you start looking out for the perfect entry point for your own trade. Okay, and then once it starts coming down again, and then the next thing you will be doing is to look for the perfect entry point again for your transactions. Okay, now you look at it here. So now one of the major things you look at is mostly the market usually reverses at around 50 to 60%, retracement of the price. Now let's take a look at it. Now this is a downtrend. Okay, now this is where it started. So let us place our Fibonacci retracement tool. So now this is the depth it came down, okay, around this place. Okay, so now this is 0%, this is 23%, this is 38%, this is 50%. Okay, so now let me just drag it a little bit. Maybe it can be able to show us this. Okay, let me drag this one so that you will be able to see the percentages I'm talking about. Okay, so now look at it. So this is it. This is 23%, this is 38%, 50%, this is 60%, this is 78%, this one is that is 100%. So when the price came down from this point, now if you can see, I located this particular horizontal line on this very level. Okay, the price started from this level and then it came down to this level. So it now decided to retrace back. Okay, the price retraced back. You look at it, it reversed back around, the level of between 0.5, that is 50%, and 60%. Now it decided to come down again. Now if you measure the number of pips from the point it stopped and then started dropping down, it's about 48 pips. Okay, so if you are using your lot size of 0.01, then you will end up making $4.8. And for those that are using a lot size of 0.1, then they will go home with $47. And of course, those using a standard lot size which is 1, then they will be going home with $475. So it's as good as that. So now for those of you that don't know what lot size and pips are, please go back to the beginners classes. I have recorded all the knowledge you need to know. Even if you're a Forex beginner, you will be able to understand Forex to a level that you will become a professional in Forex with that lessons. Okay, so you can go back to that and then you make your own understanding, build your own understanding before you come back to this. Now, after it came down to this point, now let me mark this place, okay, so that we will be able to know where we have already checked. Now, we said this was the perfect entry point for the first one, okay. Now, when this one decided to come down, it came down to this point, okay, which gave us that 46 pips I was talking about. Then we will now be looking at this point again. Now, let me take my Fibonacci tool again. You see, this is where my Fibonacci tool is. Look at it here. So I will just start drawing from where the price started coming down again. Then I will draw down to the lowest level. Now, if you look at it, when the price came down to this level, okay, it came up, okay, but it didn't hit that 50% to 60% level, okay. But then you can be patient enough to just allow the market, to do whatever it is that it wants to do. When it came up, it now came down to the same level to take out people's stop order, okay, and then it went up again. So don't worry about this particular uh, analysis, where it take out stop order. We will be discussing that in the advanced classes, okay. But all this one that I want you to know at this particular class is to learn how to trade, using retracement. Now, when it came down to this very level, it had to go up again to hit that 50% level. So now let me draw my this thing so that you will see what I'm talking about. Now look at it. It came down, it just played around this place. It didn't hit the 50%. It now came down again. It now came up to that 50%. Once it hit that 50%, it decided to what? To come down. Now let us look at the price, the total number of pips that this thing came down. That is about 34 pips, okay? About 34 pips. So whoever traded this then will be able to go home with at least 34 pips worth of profit, depending on what your lot size is. You will be going with that profit. Now this is another entry point that we marked. Now let me mark it again, so that I want you guys to know that these are things that keeps repeating in the market, and you can be able to take advantage of these things and make of money for yourself. Because one of the things I will want you to know is that it's not all about getting signals, from people that give signals, but it's all about you learning how to pick those trades by yourself. Okay. So now this was the lowest point it went. Now let us draw our own Fibonacci again from this point where we said it was the perfect entry down to the point where it came down again. Now look at it. This was the point it came down. This was where it started. Then the market retraced up. It came down. It didn't go up to this 50% level around this point. You can ignore it, then allow it to do whatever it wants to do. Now if you look at it, the price now came up to this point. Now this is another perfect point of entry. Okay, now look at it. This is another perfect point of entry. Good. If you entered at this point, now it came down as far as this point. It came down as far as this point. Now let us measure how many pips this market went down. Okay, now look at it. It went down by about 40 something pips. This will also be another profit that you will be able to make. Okay, so now this is another retracement level. So we will now draw our Fibonacci again at the new entry level that we just decided. So I'm taking my time to show you guys these things so that you will know how frequent these things are useful, and then they give you the right signals that you can be able to use before entry into the market. Now look at it. If you click at this point and then draw it down to the lowest point, it came down. We said it was 46 pips, right? Good. Now let us draw another Fibonacci, okay, from the previous entry point now to the lowest point it came down. Now look at it. The price came down, okay? It came down. It tried to retrace up, came down. It tried to retrace up, but it never reached that 50% level. And you can ignore this, okay? You can ignore this because it did not reach that 50% level you have set. So these markets, you don't have to be 100% right all the time. Whoever that is trying to explain to you that whatever strategy you are using, that all the time it have to be 100% fitting into it, then I want to tell you that that person is not giving you the right information. Okay, that person is not giving you the right information, and you may even retrace it down to the lowest level. If you can see, it didn't come up to this level. Okay, but now you are going to miss this entry point. But the point is, then what? Okay, it's better than going into a transaction that you are not sure of, then go into a transaction that you are going to lose money. Having this information and this knowledge is one of the reason, why so many people avoid getting lost in the market, and then at the same time, lack of this very understanding and very knowledge is one of the major reasons why so many people, have, difficulty in avoiding losses in the market. So it's very important you stick to this. Now, if you look at it, this happened how many times? This is about 3 times it happened. You made a, again at this point, you made again at this point, you made again at this point. Now you missed at this point, and life continues. And then if you look at it, one of the things that, you know gives one of the advantages you have if you try to, make your own analysis and then avoid anything that is not clear to you, is because you can be able to avoid volatile situations. Now if you look at this was a very volatile situation that the market came down to a certain level. Now let's take a look at this. The market came down to a certain level. It moved down by what? By 62 pips. Okay, and then it retraced back 100%. Okay, now let's say someone just came and then took this trade, and then he lost control, and then wow, I made about 60 something pips, and then that person now draws, a Fibonacci retracement from this point down to this point, and then the person now gets an entry level of, let me show you something so that you will get to understand why it's important for you to stick to some certain trading plans. Now let's say you picked a trade around this point, and then thinking that, okay, now since this have come up to the 50% level, let me sell in this market. Now look at how the market will just come down and then shoot up, and go against you, and you will end up losing a lot. Okay, but if you follow this model that I just explained to you in this video, then I tell you, you can be able to be making a lot of money and then avoiding a lot of loss in the market. I hope you have been able to pick something in this. Now after the market stabilized, okay, after the market stabilized, when it, came up to this point, it now came down to this point. Now you can now resume checking your own Fibonacci. Okay, now you will now say, okay, now look at this Fibonacci retracement. Okay, this was where the body of the candle is. Okay, the body of the candle, you try it around this point. Now if you look at it, when it came down to this point, you know you will not pick your own trade here. This will not be an entry point for you because you don't have any confirmation. That is why so many people lose money, because they are just aggressive at entry. Okay, the fact that if you entered here, you might have maybe entered into profit, but that might not be the case all the time. Okay, so it's always good for you to allow the market to keep on making its own chart so that you can be able to find the perfect entry point. Now that you have allowed it to come down, and then it retraced, and then it came up by 100% around this point, it decided to come down again, and then it went up 50%. It came down to this point. You are just looking for confirmation because you don't just want to try, entering a market that will go against you. Okay, so now as it came up to this point, which was around that 50%, you allowed it, to come down, and then it came down below the previous lower point. And then you now, okay, now if this thing goes up again, then you will be looking for a perfect entry, which is another 50%. Now, look at what it did. It just checked here, and then it decided to come down again. So this is another entry point for you. I hope you guys are paying so much attention to these clues that I am giving you of using retracement, to pick profitable trades. Okay. Now, that is another entry point for you. Okay, now you now come to this point, you check your own Fibonacci again from this point to see if you have another entry point in the next, the next point. Now look at it, this one also retraced up to 50%. Okay, now this will be another perfect entry point for you. I am taking my time to show you guys these things so that you'll understand what technical analysis is at the intermediate level. Okay, I want you to have a test of how, people make money in forex. When they tell you that people are making money, are losing money in forex, and then you don't know of people that have the right knowledge and are making money, you will always believe that there's no way someone will make off money in Forex. But in reality, people keep on making money in Forex on daily, on weekly basis, daily basis, even in hourly basis. Okay. But it's just that you have not found the right mentor, you have not found the right knowledge that will be able to teach you this. Okay. So now that is another entry point. Now look at it. When you get this entry point, then you will now try to get your own what? Your own Fibonacci again. To try it from this entry point. Now you check this, it came down to this point. Okay, when it came down to this point, it never went up to the 50% level. Okay, now at least you have gotten 2 trades. You don't have to get all the trades all the time. All you want to be doing is to avoid entering a transaction that is going to haunt you back at the end of the day. Now, if okay, let me just show you the number of pips that you will end up winning when you had entered this trade. This is about 47 pips. Okay, for someone using a a mini lot, that will be $47 profit. Okay, now let's see how many pips you will end up going home with in this point. Let's take a look at it. Now, this is 45 pips. That is $45 if you're using a micro lot. Okay, if you don't know what this lot sizes is, please go back to that beginners classes, because all my aim on this channel is to ensure that I train up the next generation of Forex millionaires. Okay, because these are proven strategies that I will be teaching you so that you will be able to understand that. Now that you saw that the thing did not retrace up to this point, I will advise you to avoid the market. Okay, now when you now saw that it decided to come down and decided to retrace up, you may check your own Fibonacci. Okay, you may check your own Fibonacci. It came down, it came up to this 50% level. But then, for you not to have gotten the entry at the previous time, it is advised you stay back and hold on and watch what the market does. Because if you look at this point, it retraced up by 50%. If you look at it here, it retraced up by 50%. It's not even up to 50%. It decided to come down, and then it went up by almost 100% around this point. So the best thing for you is to avoid entry into the market and then watch what happens. Now let's say you went against this particular strategy I'm explaining and say, okay, now since it is 50%, let me just jump in. And then maybe you picked a trade around this point. Let me show you this emoji. Let me place an emoji there so that we can see it as a reference point. Now let's say you now just decided to go against it and then you clicked a sell here. Okay, now look at how the market now went. It just came down a little bit, it went up, came down again a little bit, and then shoot up. So you will end up now losing how much? Let me show you how much you will lose from this point. From this point up to this point, you will lose up to $54. Now, you can see how people lose money in Forex because they don't follow proven strategies. Okay, so I want you to take these lessons very seriously. I want you to understand these things and then make use of them. As it is now, I may not advise you to go into live trade, but I want you to use your demo account. And I have an assignment for you. You should go and look for all these perfect entry points using your retracement. Now, if you had tried these retracement strategies, you will end up winning about 5 different trades, which will give you up to about $100 at the minimum. Okay, if you are using um lot size, if that's $100, it will give you up to, you see, this point was around 40 pips. This one was around 35 pips. That is 70 pips already. This one was around 40 pips. That is 110 pips. This point was around 50 pips. That is 160, I think, or so. This one was around 50 pips. That's almost $200. Okay, so that is how much you will benefit if you understand this strategy. So I will want you to go to your demo charts and then start checking, looking for these things. Familiarize yourself with these charts. Okay, so I hope you have learned a lot in this video. If you want to take your Forex knowledge and experience to the mastery level, I will recommend you join the Telegram group that I have posted. There's a link in the description of this video. You can be able to join that Telegram group so that you will have access to our instructors, and then they will respond to your questions. Any question you have, they will give you response full time. And then in the next video, I will be teaching you how to use the risk management tools, how to stop your trade if the market goes against you, that is your stop loss, and then how to set your target where the market will give you your profits. So that is what we will be discussing in the next class. So please, I will want you to stick and watch these videos. Pay so much attention to them. If there's anything you don't understand, please don't hesitate to go back to the beginners episodes, because they are short clips, and then they are just 1 to 7 episodes. I believe you don't want to miss that. If you are not sound and strong in the basics of Forex, that particular class or category of class, which is beginners class, just 7 episodes. Believe you me, if you pass through that episodes, you will become, very professional when it comes to understanding the languages and terminologies and all the things you need to learn in Forex. So hold on to this channel. Please, if you have not subscribed, please do subscribe so that when the next video comes up, you will be notified. Please don't forget to like this video, share it with a friend, that is interested in learning Forex also. Thank you, and see you guys in another video. Bye.